George, I believe, given our pre-show chat, you are in golds. How's
Yeah,
it going?
I did buy it, and you guys were talking about it on the show, and I was hemming and hawing, and the show's talking about, well, it's straight up from the bottom. But I looked at the chart and I saw right when it formed that bottom, I was looking at it there and I'm going, well, I'd just be guessing at it, But
Right.
the reason I was looking at it, look at all those red bars. So it's kind of like capitulation, meaning the
Mm.
sellers just maybe exhausted themselves. And then it started coming up really nicely. And it was a risky buy above 180, but I started buying in small positions, and I added some yesterday again, and I added some this morning as well. And I was adding it as we're talking there, as it's breaking out through there. One of the reasons why I kind of like gold should not be moving up for a lot of reasons, I mean, because the dollar's moving up. Commodities 101 is all commodities are priced in dollars. So if you have a strong dollar, these things should be going down, and they're not. And the dollar's still strong. So I don't know what that's telling us, but it's telling me that perhaps
this one too,
maybe, everybody has their eye off of gold, There's a gold miner, GFI, it just went up about 40% in 2 weeks. That's a tremendous move. That's something I wouldn't know where to pick that off now. But there's like AGI, which is probably on the cusp of nearly breaking out. You could use that 1295 pivot. It's kind of a wild structure a little bit. It's like a double bottom and another double bottom.
Quadruple bottom.
Quadruple bottom, yeah.
We've been talking about this monthly chart for so long here, but this month's bar is starting to look pretty interesting. So is this finally going to be the time that we're going to see the gold breakout?
It's very possible. I believe it was Jim Ropol who coined it as the Mona Lisa of cup and handles or something like that. This monthly long-term gold chart. But gold's had a few false moves. I would even kid around with all my old commodity buddies. We're going to have a gold 3,000 party. When gold hits 3,000, and we're kind of kidding about it, and then it kind of just fell by the wayside. But it's having another move, and there's enough strife in the world going on right now that maybe it'll do something here. You just never know. So, but when you get your signals, I have to take them. Volume picked up on the upside, even though it's coming up straight up the bottom. So that's a little scary. It would have been nicer to see a little consolidation, but you don't always get what you want, right? So you kind of play it, and we'll see what happens.
Do you, since this is a commodity, do you treat it any different than your typical stock buys in terms of position sizing or just how you manage the trade?
The position sizing would be pretty much the same. The only thing is about these commodity related plays, they seem like you need to pick them off the bottom, which is very difficult. They work better off bottoms than breakouts. Breakouts, they kind of work and they kind of don't. It's just kind of like with the oil stocks, they're breaking out and then they just pull back on you. But yet, if you're able to pick them off bottom support levels, they work really well. And I think gold could very much be the same way. But with that being said, I don't know where to guess on the bottom. So I do try to play them in a breakout using the same kind of principles of position sizing, risk management, stop loss, adding incrementally and just playing it that way. But, there'll be other something overnight can affect it. They can have big gap ups. The reason I started playing gold as opposed to the gold miners, the GLD will not move as fast against you. A gold miner, it could move 10% against you overnight. That wouldn't be unusual. But the GLD, may, gap down you 2-3%, not the end of the world if it doesn't work.